Hi, I'm Brett Swartz, founder of Capital Gains Tax Solutions. We're covering the DST versus the IRS, which is really the most important question if you're looking at any tax deferral strategy. Is hey, how have you performed against the IRS? What happened during these legal battles? What happened during the scrutiny? And what were the outcomes? And so before you go with any tax deferral strategy, always make sure you're asking those questions. And in particular, make sure whoever the tax professional is or attorney who's representing you actually has the experience defending their clients on their cases that they closed. That is really important to make sure that you don't make a mistake or they're not making a mistake and they can actually stand behind a track record of success. So the DST versus the IRS, let's walk through it. There's been 14 IRS audits, 12 of which were no change audits pertaining to actual clients that actually closed the Deferred Sales Trust with the DST attorney. And it's important to note that these audits were not triggered by the Deferred Sales Trust. In other words, the Deferred Sales Trust wasn't a red flag for the IRS. They just happened to happen over the 24-year track record and thousands of closes. These clients were audited. They're high net worth individuals and they were audited. And during that audit, the IRS found the Deferred Sales Trust. And so when they found the Deferred Sales Trust, they looked at it and they said, what is this? And that's when the DST attorneys came in and explained exactly what it is. It's an installment sale and it has business purpose, and there's a third party unrelated trustee who provides the trustee services. And therefore, this is why it's legal. So those were all closed out as no change audits. Well, the last two were also no change audits, but they were formal reviews, meaning it wasn't an audit on a particular client or deal. It was on the entire structure itself with the tax attorney and with the co-founder of the Deferred Sales Trust. And they looked in detail about, hey, is this legal? What are you doing? We want to make sure there's no trapdoors. Want to make sure there is business purpose. Want to make sure there is truly a third party, unrelated trustees who are providing this. And the entire structure was reviewed twice, 2008 in 2019, and in those two are also no change audits, not one single issue, which is actually pretty remarkable, considering that if you or I were to get audited, the odds that the IRS doesn't find one single issue or have one suggestion or change are very, very low. But for all of the cases so far with the DST, that's exactly what has happened. So the answer for the DST versus the IRS is the DST is batting 1,000. It is undefeated. And beyond that, though, what happens if you get audited? Well, the Deferred Sales Trust attorneys provide audit defense. So no additional charge. It's a part of the one-time upfront fee for the attorneys. And that provides you with peace of mind. So we want to encourage you to reach out to us, learn more about the Deferred Sales Trust. You can click on the link below or the application to the right. And let's find out if you might be a good fit for the Deferred Sales Trust. Thanks so much for watching this video, and we look forward to connecting with you soon.